The Consumer Protection Bureau says it will rewrite the Obama-era rule that cracked down on small-dollar lenders. One America's Kristian Rouz explains the government's latest deregulation effort.
A consumer protection watchdog is set to reconsider an Obama-era rule which restricted some payday loan practices and enforced excessive small-dollar underwriting requirements. The Consumer Financial Protection Bureau, or CFPB, issued a statement Tuesday marking yet another policy shift toward deregulation of the financial sector in line with President Trump's agenda.
We have decades of excess regulation to remove to help launch the next phase of growth, prosperity, and freedom. We must liberate our economy from years of federal overreach and intrusion so that we can compete and win on the world stage.
The payday loan rule was finalized last October under then CFPB Director Richard Cordray, appointed by former President Obama. However, acting director Mick Mulvaney, appointed by President Trump, has repeatedly criticized the CFPB regulatory practices as hampering financial sector efficiency and profitability.
Anybody who thinks that a Trump administration CFPB would be the same as an Obama administration Trump CFPB is simply being naive. Elections have consequences at every agency, and that includes the CFPB.
The planned overhaul of payday rule comes in response to rife criticism of the regulation, which proposed underwriting requirements as comprehensive and thorough for a $500 loan as the underwriting for a $500,000 mortgage. The existing payday loan rule limits how much money and how often an already indebted consumer can borrow. It applies to financial institutions, including banks, non-bank lenders and auto lenders, who offer typically higher interest rates on short-term small-dollar loans. Experts say the CFPB's original rule was drafted in response to the alarmingly fast expansion of household debt.
Too many of these loans trap borrowers in debt they cannot afford instead of tiding them over in an emergency.
The payday loan industry welcomed the CFPB's latest announcement, saying the rule was based off a Democrat partisan agenda seeking to increase the role of government in the small-dollar loan segment. Critics of the rule have said it neglected research and data, which did not support the view of payday loans as harming consumer sentiment and purchasing power.
And we don't find the analysis, of course, on Payday anything that's compelling. But they moved toward this not because they were consumer-oriented, but because they really are oriented to do away with certain kinds of products that they deem not to be the kind of product they want.
The rule is seen as hurting purchasing power as it limits the amount of money available to consumers. Meanwhile, the Trump administration seeks to enhance consumer confidence by offering a wider range of credit products to U.S. consumers. The White House hopes the higher costs of borrowing for American households will be offset by the increase in wages and the solid labor market stemming from President Trump's deregulation, tax reform and infrastructure package. Kristian Rouz, One American News.
We can use your help. Call your cable provider and kindly demand that One American News is added to your lineup. Call today.